At 12 minutes past 7, mortgage rates are on the way down after the Reserve Bank cut the official cash rate to 3.25% yesterday. But there are fears of the impact of the lower rates on the overheated Auckland housing market. So who are the winners, who are the losers? And is now a good time to buy? With me, NZIER principal economist Shamubeel Eaqub. Shamubeel, good morning to you.
Good morning.
Were you one of those that thought this would happen, or did you think he would hang fire?
We thought it might happen, but that they shouldn't do it.
Right. Okay, and so we'll find out why now. First of all, the winners. Who are the winners from what happened yesterday?
Borrowers and people who are looking to enter the housing market.
Mm-hmm. Right. The losers on the other side of the coin, investors.
Investors and savers, especially retirees. Quite often they will have term deposits that are earning very little interest in the bank right now, and that's going to be driven even lower.
Yeah, but they're frightened, and some of those people right now are probably eating into their principal, so they're seeing their future disintegrate before them. What can they do? Because on the horizon are just worse returns for their money if it's in the bank.
That's right. So interest rates are likely to stay low for quite some time, and for savers it really means that you've got to get good financial advice. It's not good enough to just put your money in the bank anymore, because it's not earning you enough money, and quite often it's not keeping pace with the cost of living increases. And if you're eating into your principal, you might not have enough money because we're living so long.
Okay, so really they do have to get some serious advice on how they can make their money work for them, because having it in the bank is not going to work.
That's right. And I mean, we went through the finance companies and all of that kind of stuff, and we've seen that, just these one kind of undiversified portfolios is simply not working for people.
But this is what they're going to say, you see. So these people that are listening to us now, watching us now, who are trying to live, supplement their income with interest on their money, they're going to say, well, hang on, we're reluctant to go to a finance company for a slightly better return because look what happened before. Some of them were probably stung themselves. So are they looking at, I don't know, they're looking at going into some kind of combined scheme?
Yeah, and I mean, we've got lots of good managed funds. We've got ways to get exposure into foreign equities. So these all sound very complicated and scary. But if you go through a financial advisor, what they can do is they can give you this exposure in a managed way that's fit for you.
Yeah.
And I think what happens is when you try to do it yourself, it doesn't quite work.
And it's important they're honest and they say, look, we actually need income. We need to give you this money and we need money in return.
Absolutely. And, when I talk to my financial advisor friends, they always say that you got to make the right portfolio for the right person. For a person like me, they're thinking about how can you take most risk so you can grow your principal. For older people, they're really thinking about how do you get more income to sort of give you the security and preserve the principal that you have.
Okay, so borrowers, exporters, the farming sector, they are the winners in this. They will like the fact that the dollar has dropped, of course, in terms of exporters and farmers. Let's talk about the property market, because the Prime Minister played down the effect that this was going to have on the property market. It certainly is not going to help the property market in Auckland, is it?
The Prime Minister has played down the impact of everything on the property market, both on the upside and downside. Lower interest rates are going to drive up demand for housing, and Auckland is going red hot right now, and we're going to throw more fuel on this thing. And the Reserve Bank thinks that its macroprudential tools, which will come into effect in October, will have some influence. But really, what about between now and then? And so I'm really quite worried that the Auckland housing market, which is extraordinarily overvalued and extraordinarily hot, is going to get even hotter over coming months.
In your opinion, in terms of extraordinary overvalued, in your opinion it is?
Well, relative to incomes, relative to rents, according to the opinion of the IMF,
not relative to supply and demand, though.
Reserve Bank, Treasury.
Joe Hockey across the Tasman said the other day, if the Sydney market was overpriced, people wouldn't be leaping into it the way they are.
Oh, that's just a stupid comment, and we both know that.
So in terms of what people should do getting into the market, because houses in Auckland, houses right around the country got cheaper yesterday. Should they, if they're thinking, God, can we afford it? Can we get in? If they decide they can afford it, should they buy today?
Not if you're doing it for finance and capital gains in Auckland.
But if you're doing it to live?
To live, absolutely. But make sure you've got savings for retirement, because house prices don't always go up.
All right. Shamubeel Eaqub, NZIER principal economist, thank you very much for joining us.
Thank you.